The S&P 500 is up over 25% year to date, and prices are basically back to all-time highs. This is a tough time for investors like me and you because we're all wondering in 2024 if the market is going to crash or if the market is going to continue to go up like it did in 2023. The United States avoided a big recession in 2023, thankfully to decreasing inflation and of course great stock price returns. However, in 2024, experts now say a soft landing is possible, which would be great for something like the S&P 500 or something like I own, which is Vanguard's VOO, and a mild recession is possible in 2024, which would make stock prices most likely drop and the values of our portfolios to go down dramatically. Now, hopefully I didn't scare anybody too bad, but in this video, I'm going to be taking a quick dive into my S&P 500 investment strategy for 2024. This includes what I plan to do, how much I'll invest per month, when will I buy, and overall my investment strategy for 2024. So without further ado, let's get started. 2024 S&P 500 forecasts are in, and the consensus price target appears to be the 5100 level, which would signify modest gains for stocks next year of around 8.1%, with the S&P 500 currently sitting around the high 4700s. On the lower end of the chart, we see JP Morgan Chase having a price target of 4,200, which would indicate a negative 11% performance, and Yardeni Research with a 5,400 price target, which would indicate a positive 14.4% performance in the next year. Fed rate cuts are also expected in 2024, and so I also have a chart on how the major indexes perform from the start of the rate cycle to the last end of the rate cycle. So on average, we see negative performance from the major indexes like the S&P 500 going negative, as well as the NASDAQ and Dow Jones. And rate cuts also mean that high yield savings accounts yields and money market yields are going to be going down, which is why I'm going to be cutting my cash position in these accounts to around 5% of my overall stock portfolio, but I'll expand on this later. Now, if the stock market continues to follow this negative trend based on historical data, my advice is to honestly ignore the price movements in any article that's, regardless if it's going to be good or bad, just ignore those articles. I honestly believe that you really can't time the market, and time in the market always beats timing the market. There was a ton of news articles saying that there was going to be a huge recession incoming in 2023, but the total opposite happened, and if you kept your money in the market, you made a ton of money this year because the stock market just absolutely rocketed to the moon. That's why I love to buy Vanguard's VOO in super small amounts or just ETFs in general, and small amounts can mean anything from $20 a week if I have spare change to up to $500 per week if I'm feeling really bullish in the market. And as long as you're buying the stock market on a constant basis, that will serve you well regardless of what stock market environment you're in, because if the stock market's going to go down, you're still going to buy the downside, and when the stock market goes up, you'll be making a ton of money from buying that dip. But if the stock market doesn't take a dip and however it goes up, you'll still be making money regardless because you've been dollar cost averaging, which is the best way to buy VOO and just ETFs in general. One of my many goals for 2024 is to up my investments per month, which means keeping up with funding my 401k with my employer, and of course getting my VOO position with Vanguard in the S&P 500 to over $100,000 by the end of 2024, which will be challenging but definitely worth it in the long run since I'm around halfway there before the real compounding takes place and my investment portfolio absolutely skyrockets from higher dividend payments to hopefully live off those dividend payments in the future, and of course higher returns per every percent that the S&P 500 goes up. I'll be taking more returns, which means that I can retire hopefully earlier and hopefully with a lot more money than I did today. Now, if we take a step back in 2023, remember, we had a regional banking crisis that created shockwaves throughout the financial industry as rapidly rising interest rates led to large unrealized losses for some banks, such as Silicon Valley Bank. This not only caused big losses in the stock market, but also a scare, and that's why we saw a huge drop in March of this year, as you can see in this chart from Seeking Alpha, in stock prices because of fear. Fear is one of the biggest things that drives the stock market to go down, and when the stock market does go down, like Warren Buffett said, be fearful when others are greedy, and greedy when others are fearful. So when others are fearful, you have to buy the stock market. And if you don't, you're gonna watch the stock market return to all-time highs, and you're gonna be left holding a bag of no money. However, with interest rates being so high, that caused high yield savings accounts and money market account yields to remain well over 5%. Now, the one that I own is by Vanguard, which is VMFXX, which is Vanguard's federal money market account, and that right now is yielding well over 5.3%. So in 2023, I had around $7,000 to $10,000 at any given time in buying power in my Vanguard money market account, which is basically where my money sits to earn an interest rate return by doing absolutely nothing. So by doing nothing, just sitting here on this chair, I'm earning interest by having money just sitting there in that money market account paying me dividends. In case there was a huge dip in the stock market like the S&P 500 or NASDAQ, those are the two big markets I love to buy from. And if there was a big dip, I would just pull from the money market account and buy those ETFs like VOO or QQQM. Now, why is because if the Fed cuts rates, that means that the yield that you'll be earning on savings accounts or money market accounts will go down. Tech stocks are also known as the Magnificent Seven, which make up a high portion of the S&P 500, also saw impressive performance this year, which contributed to over 2/3 of the S&P 500's returns this year. Some of the most notable stocks, such as Tesla, had over 100% returns, Nvidia had over 230% returns, and Facebook or Milla had over 190% gains. And some of the best stocks in the stock market are the highest allocation of the S&P 500, such as these ones like Apple, Microsoft, Nvidia, Google, you name it. And I strongly encourage each and every one of you to consider owning growth ETF, or at least allocating one, maybe up to 20% or maybe even 25% in your stock market portfolio, because you don't want to be left behind when the stock market goes up like VOO and the S&P 500. But most of the time, tech stocks will go up higher than the S&P 500, and I want you to capture those returns to hopefully retire earlier and have more money in your stock market portfolio than having something like only VOO or only like SCHD or some dividend stocks. Now, my favorite growth ETFs for any stock market portfolio is QQQM or SCHG/VUG for more diversification and broader market growth. And if you want something more concentrated in more tech plays that have a higher allocation to some of the best stocks like Apple and Microsoft, consider something like FTech or VGT. And if you want to capture some of the semiconductors like Nvidia, AMD, and how they had over 200% returns, you could take a look into something like SMH. Now, all in all, I plan to keep on constantly buying VOO and always having a positive attitude in the financial markets for 2024, because I don't have a crystal ball. I don't know where the market's going to be headed, but I know that if I always buy the markets, reinvest my dividends, and just keep a positive attitude in the next year and even the next 5 or 10 years, in the next decade, I can have a ton of money by having time in the market versus timing the market. I'm never going to sell my position in VOO and any of my ETFs really. And overall, if I just have a long-term mindset, I will get through this next year and the years to come. Now that wraps up for this video, guys. So hopefully you guys enjoyed it. If you guys did enjoy it, please give it a like because this cute puppy did, and comment down below, your stock market prediction for VOO in the next year. But overall, I'm going to be super bullish on the stock market for next year. Hopefully you guys have a great rest of your day and continue to crush in the stock market. And hopefully you guys have a great year and good luck. Peace.